Alright traders, welcome back to another video. In this video, I'm going to teach you how to trade RSI Divergence and the method that I use to trade RSI Divergence and a strategy that you can implement literally today. So now this is going to be on the Forex market, but you can use it on the stock market and basically any market you want. Now before we begin, all I ask in return for these videos are of course a like and subscribe. So if you enjoyed the video, make sure to like and subscribe so you never miss another post and you can support the channel. If you're not already in our free Discord, make sure to join that. Links as always in the description down below, as well as our MW Academy, which teaches you how I trade price action and patterns profitably. And with that being said, let's get into the video. So the first question is going to be, what even is RSI Divergence? And RSI Divergence, in the simplest way possible, is when RSI starts moving in the opposite direction as price. Now, I don't mean this in the sense that RSI going up and price going down is divergence. What I mean is that RSI divergence is when price action starts moving in an opposite trend, basically, compared to price action. So for example, let's take out our ghost tool here and just theoretically draw out a chart. So we'll draw out some higher highs and higher lows, and let's just put that there. Now, in this scenario, what RSI divergence would look like, let's get rid of RSI. We're going to put out our 70 level and 30 level. If you're not already familiar how to read RSI, make sure to go check out the video I have on it, link in the description down below. So let's pretend this is our 70 level and this is our 30 level. Well, RSI in this case would be moving something like this. You would have RSI going overbought, coming back down in, and then making a lower high. So it looks something like this. So now notice what's happening here. RSI just made a lower high, right? We have this high on the RSI and then this high, which is a lower high. But price action actually made a higher high, right? We have this high and then this high. This is a higher high compared to this high. So this is what we call an RSI divergence, when the RSI trend is the opposite of the price action trend. So how can we actually use this? Well, the traditional way to use RSI divergence is that once you see that price action has made a higher high, right? So once we break through this high, yet RSI hasn't made that higher high and is still making a higher low. Well, once RSI goes back down below that 70 level, then you look to short. But I have a method that will actually increase your accuracy with the RSI divergence, and it won't result in late entries, because if you're going to wait for RSI to make this lower high right here and come back out from being overbought, that means that you're going to be entering the trade when RSI is somewhere around here. And if that's the case, you may be entering a little too late, or at the very least, you're just not getting the best entry point because you're going to be a little bit delayed. But like I said, I have a trick to fixing this issue, and it's going to involve Fibonacci extensions. So if you don't know how to use Fibonacci extensions, I do believe I have a video on it, and I know for a fact I have a video on it in the free Discord. So if you're not already in the free Discord, make sure to join that. Links in the description down below. So now let's get into the actual examples. So we are on pound yen on the 15-minute chart. We're going to bring back our RSI. Remember, the RSI is composed of the 30 and the 70 level, and actually even the 50 level, but we're not going to be using that in this video. So we're just going to watch this closely and see if we can spot some RSI divergence. And if you're confused up to this point, this should clear things up as we dive into this example. So we're just going to hit the play button and let RSI do its thing. So here we go. So this is an example of RSI divergence. You can see right here we have a low on the RSI and a low on price. But now notice that this low on RSI followed by the next low, compared to this low, I'm going to say this low a lot, this low is higher than this low. But when we look at price action lows, we see that this low is higher than this low. Or in other words, this low is lower than this low, while on the RSI, this low is higher than this low. So basically, price action trend is down, RSI trend is up, and that's what we call a divergence. So what we're going to use to actually increase our timing on this is whip out that Fibonacci extension tool. And what we're going to do is just use the clearest high and low point before the main swing that caused the RSI divergence. So for example, this is our main swing currently because obviously this is the most recent swing. So we're just going to look back one swing and we're going to identify it right here. And we're going to take our Fibonacci extension tool and go from high to low and then back up. Now what we're going to want to do is the following. We want to look for RSI divergence that is between this 1.414 Fibonacci extension and the 1.618. So we're just going to take our box tool and make a zone out of that. So this is what's going to help you identify where price is likely to turn around when you identify RSI divergence. So we have RSI divergence, as you can see here and here, right? This is RSI divergence. But if we were to get in right around here, look at where we're getting in, right? That is, we're waiting for RSI to come back out first before entering. So look at where we would enter. RSI comes out right around here. So this is where we would be entering. But look at how we start losing money pretty quickly. So instead, what you want to do is only focus on entering in this zone. So now you sort of have this entry zone that you can trade this RSI divergence in without having to wait for confirmation. Now, don't get me wrong. I love using RSI the way that we just talked about, which is waiting for it to come back out of the zone. But with something like RSI divergence, you don't have much time to actually get in, so it's better to find a method to get in faster without sacrificing profitability, and that's what this does. So this 1.414 and 1.618 zone is basically just an area on the chart where price action is likely to start weakening. So combining an area where price action is likely to weaken with RSI divergence, which is a bullish signal in this case, is the perfect combination to time your trade. So we're going to say we entered the trade right in here. So we're going to enter the trade right at the beginning of this zone right in here. So that's going to look something like that. We'll put our stop loss right in between that 1.618 and 2.0 Fibonacci extension tool. And let's, for the sake of it, just put our target at a 1-to-1 risk to reward. So now let's hit the play button and see what happens here. So as you can see, we bounce right off of that zone. So now we're going to wait for the next signal, which is going to be another RSI divergence, and take a look here. What do we have? We have another RSI divergence. Let's take a look at this high right here. That matches up with this price action high here. And then let's take a look at this high on the RSI right here. That matches up with this high on price action here. So again, what do we notice? RSI is making lower highs, but price action is making higher highs. So if price action is making higher highs while RSI is making lower highs, this is called RSI divergence. They are diverting in trend. So now that we know this, what do? We're going to take our Fibonacci extension tool. Okay, and this is just an example. We're going to take the most recent swing, which is going to look something like this, from this low to this high, and then all the way back down. Okay, we're going to mark out our zone and look at how this ended up working out. Okay, we have our zone here. This is where we would sell short. Okay, when RSI is going overbought, you want to look to sell short. When RSI is going oversold, which is right here, right? These are oversold RSI entry signals. These are overbought RSI signals. So we're buying when it's oversold and we're selling when it's overbought. Don't forget that. So I already played this a little too far to get our entry point, but you can see how well that would have worked out, right? If we entered the trade right in here, let's move that right there, right? Just at the beginning of our zone, stop loss right in the middle between 1.618 and 2.0. And for the sake of just testing this, make it a 1-to-1 risk to reward. You can see how well that ended up working out for us. So let's let it keep playing here and see if we can spot another RSI divergence opportunity. And this is, let's see here, is this RSI divergence? Yes, it is, but it's very, very minimal. So you can see we have a high right here, RSI, we have a high right here, price action high right there, RSI high right there. RSI is moving lower, price action is moving higher, and this is what we call RSI divergence. But in this scenario, it's a little more difficult because we don't have a main swing. Oh, wait, yeah, yes, we do. Yes, we do. So we're gonna go from, let's see here, main swing would be the clearest high to low point before we broke through this high right here, okay? So that right there. So that is going to be, I believe, this low to this high, back down, and look at that, okay? This was not planned, all right? So we take our zone right in there. Oh no, it didn't make it. It did not quite make it, darn. But we just missed it. Just missed it, dang. Okay, so we can't count that one. We're gonna skip over that. Let's bring back our chart here. We're gonna keep going and see if we can spot another RSI divergence opportunity here. Okay, so here we go. We have an example right here. Let's take a look at RSI first. We have a higher high, and then we have a lower high. Now let's match that up with price action up here. We have a high right in here, and then a high right in here. We're gonna take our Fibonacci retracement tool. We're gonna go from the clearest low to the clearest high, which is right there. Bring that back down, and our point of entry is right in this area over here, which is pretty tight. It is a pretty tight entry this time. Let's take a look at what happens. We would have entered right in here. In fact, let's just bring this back a little bit just so we can actually see what happens. We're gonna enter right at the beginning of this zone, which is right in here. Stop loss is going to be right in the middle, right around here. Get rid of that. Okay, and let's see what happens here. So this one would have been pretty close to stopping us out. We're gonna take our risk to reward, bring that down to a 1-to-1 just for the sake of testing. And there you go. You can see how that ended up working out. Remember, this is an RSI divergence because we have a high here on price action and a high here. These are higher highs. And then if we take a look at RSI right in here, whoops, if we take a look at RSI right in here, you can see we have lower highs. So on price action, we have higher highs. On RSI, we have lower highs. And that is how you can trade RSI divergence without really having to wait for it to actually happen. So that is it for this video. Hopefully you guys enjoyed. As always, if you liked the video, make sure to like the video and subscribe and join our free Discord. Link as always in the description down below. And if you want to learn how I trade price action and patterns, feel free to join our MW Academy, link in the description down below as well. Thank you guys so much for watching, and I will see you in the next video. Peace.